right, guys, welcome back to class. This will be Forex class basic 2 lesson 4. I want to apologize for uploading all these videos very late. Ideally, we upload on Tuesdays and Thursdays, and then on Sundays we'll be doing reviews. So henceforth, we're uploading videos on Tuesdays and Thursdays, and then on Sundays will be our review classes. I'm not able to meet up with the times so far because of so many logistics I'm putting in place. I'm the one editing these videos myself, and I'm also a trader. So the week is so tight for me, and there is so much I'm currently working on. Do you understand? So, but I promise to give you the time necessary to do all of these videos, and then for the benefit of everyone. Do you understand? So next class is going to be a review, which is Sunday, which happens to be tonight. So once I finish the review, I'll record, edit, and upload it also for those on YouTube to participate in the review that we have done. I want to say, keep the zeal burning for you to learn. When you are learning the basics like this, sometimes it's too boring because you want to just start making money. You are told that Forex pays, like you make money trading Forex, so you want to be just given what to do now to make money, especially those who have been in this space before but are not yet successful. So all you just want me to do now is just tell you what to give you money, and don't worry, we're getting closer to that time. Our next video, apart from the review class, is going to be the advanced class proper. So I'm going to start the advanced class, and we hope that by the end of June we should be able to finish all of the classes in the advanced class. But if we are not able, then it will not exceed July. We should be through with all of the courses in the advanced class, and I'll leave you to start practicing while I'll be doing live sessions. I'll be posting analysis videos of analysis, my weekly analysis videos, and all of that. So I'll be doing all of that just to encourage you to be trading on your demo. So you'll be testing out all of the things I'll be doing on the live sessions on your demo account. So by the time you also now start getting your own edge from what I'll be doing, you'll be getting your own edge, because everyone has different psychology about the market, and the way I approach the market is not going to be the same way that you will approach the market. Why? We are different individuals, we are different people, we think differently, we live in different environments, we live in different countries. So there's going to be so much factors affecting your trading apart from just Forex alone. Your mind is largely involved in this. There's that saying that Forex is 90% psychology and 10% strategy. So why is that so popular? Because over time, experience have proven that you can even have a very powerful strategy in your hands, but if your mind is not well set, if your psychology is not right, you will still be making a mess of it all. There is this part of walking through a process. You have to grow. Growth is a process. So, and that level of apprehension you need to be able to have an edge in the market is going to be determined by how you practice, how you grow. So this cannot be determined by anybody. It's strictly personal and psychological. So I will advise that you be patient and just follow the process. In a matter of weeks, we are going to start trading, and when you start trading, you start making money. A point will come where I will permit you to start a live account, and with that, I believe whatever I'm doing here is not a financial advice. I'm only just trying to educate you, and if you find whatever I'm doing here useful that you want to apply in your account or in your life, is actually at your own risk. But a point will come where I will deem it fit that, okay, if you want to go into live trading, you can go into live trading. But is at your own risk as well. All right, with that said and done, let's go to disclaimer. Trading leverage products such as Forex, derivatives, commodities, melters, binary, and crypto may not be suitable for all investors as they carry a high degree of risk to your capital. The materials and slides shared in this video are simply for education purposes. Go Capital will not be responsible for any loss incurred as a result of the information shared. This video is my personal opinion, and you agree that whatever actions you take based on them is strictly at your own risk. This is not a financial advice, simply for education purpose. All right, we go to our first topic of today, and our first topic of today is going to be types of orders. You know, when trading in the Forex market, you need to place orders for you to enter a position. You do not just make money by sitting down. You know, people who make money, they transact, they buy and sell. So those buying and selling are orders that are being made. Do you understand? So transactions are orders that are being made. So the same thing applies in Forex market. Orders are placed in order to enter a position. So basically there are two types of orders in Forex trading, which are number one, a market order or instant execution. A market order or instant execution. Then the second one is a pending order. Now let's explain the first one, market order, which or instant execution. A market order is an order to buy or sell at the best available price or the current price. Let's say when you open your MT4 or MT5, whatever platform you are using, and you selected a particular currency pair, in this case now Euro USD, maybe the price, the current price of that Euro USD that you open is 1.2160. That's the bid price, and then the ask price is at 1.2152. If you wanted to buy Euro USD at that market price, it will be sold to you at a price of 1.2152. Why? Because, you know, if you are buying, it means you are using the ask price. I told you that the ask price is always higher than the bid price. So sorry, there was an error in this place. It's supposed to be 62, not 52. There's an error in this place, please. So when you are buying, you buy at a higher price. So if you are buying, it means the market is selling to you. So the market always says higher to you. So this is an error on my part. So change this 5 to 6. So if you wanted to buy Euro USD at market price, then it will be sold to you at the price of 1.21562. Sorry, it's 1.2162. I hope that is taken. All right. So now, if you are buying, it will be sold to you at this price, 1.2162. Then if you are selling at that current market price, you'll be selling at 1.2160. You understand? So pending order are orders that are executed at a later time or at a price you desire, at a price you specify. Let's say when you open your MT4 or your MT5 and you selected a particular currency pair that you wanted to trade, and when you looked at the market, you've done your analysis, or you are not able to do analysis now because you are still learning the basics. When you are in the advanced class, you know how to make analysis. Our advanced class videos are going to be practical. We're not going to use so much of PowerPoint slides. Do you understand me? We're going to use the real chart itself to teach. You get me? So I think from the very beginning itself, I'll do my best to ensure that I stop using more of the slide, because as it is now, this is just theory. Why? It is basics. So but when we enter the advanced class, I'll be showing you Forex charts, and you will be getting all these concepts first. You'll be seeing them. Do you understand me? So a pending order, when you open the market and the price that the asset you are looking at is trading at, is not really the price you want to buy. You don't want to buy at that price. You want to buy at another price, maybe lower than that one or higher than that one. Then you need any of these orders that are here: a buy stop order, sell stop order, buy limit order, sell limit order, stop market order, and take profit order. All of these are types of orders. There are many other types, but these are the common ones that are common with brokers. Do you understand me? So you will use all of these ones. In fact, by the time we start trading, you will use all of these things every time we enter a trade. It may not be all of them at once, but we'll be using them. Are you getting me? So there is a place the market is at, and you don't want to buy the market at that price. You desire to buy it at another price. You can set the order down while you are away. Where if the price gets to that particular price level you set down, it will trigger on your behalf. Your laptop does not have to be on, your phone does not have to be on. As long as you've set it, you forget about it. So if you are correct and market gets to that particular price level, it will trigger you on. Do you understand? So some people call it set and forget, and that is actually called a pending order. Okay, so let's go to the next slide. Sorry for this. So let's go to the next slide. Market execution. This is to explain it. Like you came to the market and you are seeing something like this. Just like I told you before, in this example, I was correct here. The ask price is always at the top. It's always higher than the bid price. So if you are buying, you buy at the ask price. So if you are selling, you sell at the bid price. So, and remember that if you are selling to the market is buying from you. So it's just like a circle. Do you get? So the market execution is an instant execution. You just press your buy or sell button, and the market just trigger you on a position instant. It does not have to wait. So of what we call slippage. Most times as you enter the trade, because of different factors such as the speed of your internet and many other factors, the market may not trigger at the exact price you wanted. Maybe a few pips will make it to differ. It may differ with a few pips or a few pipettes, a few points. So, but however it is, the market execution is still okay, depending on the kind of trader you later become. Market execution and stop orders, all of the other ones, depending on others, we use all of them in our advanced class. Do you understand? So, but to buy means you are buying instant at the current market price or the available price. Then to sell means you are selling at the bid price. They are the current. That is that for the market execution. Then for a buy stop order, this is this blue line. Take this blue line for example as a price, and that is the current market price. When you open your chart, that was where market price was at the moment. So if you are taking a buy stop order, it means you have done analysis and you have perceived that than where it is currently. So if you are buying at a higher price, at a price above current price, you will set a pending order above current price. Whenever you set a pending order, type of order is called a buy stop order. So this green line is the desired price you want to buy the market, and this is where the market is currently. Market have not gotten to this particular price level. So should the case you now set your trade, if you want to set a trade for it to trigger you into a buy at this higher price than where it is, the order you use is a buy stop order. And when you do so, your stop loss can even be below current market price depending on your analysis. So if your analysis is telling you to put your stop loss below the entry price or below current market price, you will order that you are buying at a higher price than the current market price. So, and probably you are not here to, you don't have the time to wait till market gets to this place before you buy. So you can just set it down. When market gets to it, you trigger. Do you understand me? So if market triggers you on a buy and it starts and it continues to go up, you'll be making profits. So whenever you are on a buy and market continues to go up, you'll be in profit. But if you're on a buy and it continues to this price level and it triggers you on a buy and it starts coming down like this, then you are recording losses already, because whenever you are buying, you are expecting that price continues to go up. That's what it means to buy. So a buy stop order is placed above current market price. The stop loss will be depending on your analysis, but the take profit will always be above the desired price that you entered. So depending on the analysis, when we do analysis later on, you will know the right place to put your stop loss, you will know the right place to take profit. But a buy stop order is an order placed at for a buy position at a price higher than current market price. You understand me? All right. Then a sell stop order. A sell stop order is the reverse of a buy stop order. The current market price is this blue line you are seeing here, and you desire to sell at a lower price compared with the current market price. And what you do is, in that case, you set an order for a sell below the current market price. Maybe you are busy, you don't know if you will have enough time to stay till market gets here before you sell. From your analysis, you discover that if you sell at this price, market will still continue to sell. So that's why you want to buy there, you want to sell there. So you can set the pending order for a sell to trigger when it gets to this price level. So, and that sell is always below the current market price. If it's in that case, then what you are doing is a sell stop order. It's a sell stop order. So should the case market continues to go down after it triggers you, it will be in profit. So your profit will always be below the desired price. So but should the case after this trigger you in on a sell and it continues to go up, you will be in losses. That is not the need for the stop loss. So I will tell you what the stop loss is, a stop loss order later. I'll tell you what it's all about. So but for a sell stop order, is an order placed for a sell at a desired price below current market price. Do you understand? So the sell stop order is placed below current market price. The stop loss will be above the entry price. The take profit goes below the entry price. Like I said before, the stop loss can also be above the current market price. It does not have to be in between the current market price and the place you are entering. It can still be below, depending on the analysis, depending on the environment of your analysis. So all of this is not difficult to know. By the time you start trading, you will understand what to do with all of this. And constant practice makes perfect. So a sell stop order is just the opposite of a buy stop order. Now, a buy limit order. What is a buy limit order? I hope you have processed the other two. If you have not processed them, you can rewind the video and pause it so that you can understand what I just talked about. So now, buy limit order. A buy limit order is, don't get it twisted, just listen. This is current market price, this particular blue line. This is where market is currently, and you want to buy at a lower price. For a buy stop, you want to buy at a higher price, but for a buy limit, you want to buy at a lower price. Do you get the difference now? So market is currently at this line, at this current price, at this level. That's where market is, but you want the market to still continue to buy. You want it to go up. You want to buy and make profit, but you know that the market will still go down first before buying, and there is a particular level you have targeted that the market will go down to before it will start buying up. If you set an order in that manner, you are actually doing what we call a buy limit order. So you believe that the market will go down to a certain level first before buying. That kind of order that you set for a buy below current market price is what you call a buy limit order. So after market leaves this current price and starts going down and triggers you here on a buy, if it continues to go down, you will be in loss. But should in case it touches this price level that you desire and it starts going up, you'll be in profit. So this is where market is, this is where you are currently, but you know the market will go down first before buying, and you are not going to be here to watch it. You are busy. You don't want to wait till market gets to that bottom price, lower price, before you buy on instant execution. You want to set it and leave your phone or go and do what you are doing. Yes, you can set it. That kind of an order is called a buy limit order. So you set it below current price, and when it gets there, it will buy and to take you on a buy order, buy position. And when you're on a buy position, you only make profit when market starts going up. Do you understand? So should the case after this trigger you in on a buy and it continues to go down, then you'll be recording losses. So a buy limit order is placed below current market price. Remember that for a buy stop is placed above current market price, but for a buy limit is placed below current market price. So stop loss will be below the entry price. Whenever you are on a buy, stop loss will always be below. Do you understand? Because if market is going down, it is no longer buying, it is selling, and that will be making losses. So in order to stop your losses, the stop loss will always be below the price. Do you get? So then your take profit will always go above the entry price for you to make profit. All right, for a sell limit order, a sell limit order is an order placed for a sell at a price higher than current market price. You have seen that market is going to sell, but it will still go up first to a particular level you have seen from your analysis. You know that it needs to go up first. If it gets up, it will sell to that from that price level. So, and you are here, this is where current market price is. So the kind of order you set above the price level, then to later sell, is called a sell limit order. Do you understand me? So this is the opposite of the buy limit order. If you are placing an order for a sell above current price, that kind of order is a sell limit. Do you understand me? So should this trade trigger here now, this sell trigger here on this sell, and market continues to go up, you will be in losses. So but after it triggers you on the sell and it continues to go down, then you'll be in profit. So, and that way stop loss will always be above the price, and then the take profit will be below the current market price or the entry price. So that is the only way you can make profit. So this type of order is called a sell limit order. You understand? Now let's compare the buy stop and the buy limit. For the buy stop order, you want the market to buy at a higher price. Market was here, but you desire to buy here, so you place your order above the current price. But for the buy limit, you want the market to go down first before buying. You want it to go down to a lower price before buying. That's just the difference. The only difference is the entry price. The entry price for a buy stop is above current market price, while for a buy limit is below current market price. The desired entry is below current market price, while for this one, the desired entry price is above current market price. That's the difference between a buy stop and a buy limit. I hope you get. Then for a sell stop and a sell limit, it's just reverse of the process for a buy stop and a buy limit. So a sell stop is you want market to sell at a lower price. This is the price market is at currently, but you desire to sell it at a lower price. So you place your entry below the current price. When market gets there, to trigger you on a sell and continues to sell. But if it continues to go up after triggering you on the sell, then you'll be in loss. But should it continue to sell after triggering you on this sell here, then you are in profit. So a sell limit, a sell order is that kind of order you place for a sell at a later price that is lower than current price. Then for a sell limit, you placed the order at a desired price that is above current price. Do you understand? So you want the market to go up to a particular price above the current price before selling. That's just the difference between the two. So you can take all these screenshots and compare them in your leisure time just to revise and understand. So all this order, you are the one that sets them by yourself. You are the one that determines them depending on your analysis, depending on what you want to do. You can decide to never use pending orders in your trading career. You can decide to just use only market execution. That is, as you come, you wait till the price get to where you want and you enter the buy instant or the sell instant. Or that some people, they don't even use market execution at all. They don't use instant execution at all. They only use pending orders. So, but I use both. I use both pending orders. I use execution, market execution order as well. Do you understand? Okay, so I told you that I'll be talking about stop loss. Stop loss is an order type that is used in forex trading in order to limit losses from a trade. It is also known as a stop order or a stop market order. The order will trigger a trade to be closed at a loss. Let's say you enter a trade now and the trade is going against you. You don't have to panic or cry. Before you enter the market, you have already done your analysis. You have already studied the amount of money you are willing to risk, because trading is risky. It's risky. So you have to risk a particular part of your money to trade. So should in case market go against me, how much do I want to lose? At what point will the market go against me? So you will set that stop loss. That stop loss is called a stop order. When market gets to that particular price level, it will close you automatically on a loss, and that position will be closed. You cannot lose further than the stop loss. So the stop loss is the limit you have set for your losses. That I don't want to lose all of my money. This is the amount I'm willing to risk on this trade. If market gets here, stop me out on a loss. I'm no longer buying or selling at this price. Take me out. Once you set that kind of an order, whenever you are entering an order, whether it is pending order, whether it is instant execution, you must ensure you add a stop market order, a stop loss order. You cannot trade with, you should not trade without stop losses. People trade without stop loss, but you should not. Don't try it, because you are not the owner of the market. You cannot enter the market expecting that it will just go in your direction every day, every time. There's nothing like that. You will record some losses at some point, at some times. So you have to set a stop loss in order for you to limit your losses in case the analysis goes wrong and you don't want to lose further. Then the reverse is the case for a take profit. Take profit is the particular place you want market to get to and close with a profit. The trade will not continue to be in profit forever. The market goes up and down. So let's say you enter a buy position and the market is going up after you enter the buy. It means you are in profit. It will not go up forever. It will get to a particular point and it will start turning back down again. So in order for you to book your profits that you've made, you will set a particular price level that you want market to close you automatically at in profit. So you must also always do this. Sometimes you can take profit manually. Maybe market has not gotten to the price level you wanted to get to, but where it has gotten to, you feel is okay that market might reverse, then you can decide to close in profit manually. The same thing for the stop loss. You can decide to close your loss manually. But if you are a good trader who don't want to be controlled by the movement, the swings on the market, just set the stop loss and take profit, according to your analysis, and forget about it. If market gets to your take profit, to take you out. That's how to mature. That's how to develop your psychology to be the kind of trader that is a professional. Do you understand? So the stop loss is to assist you to not lose more than you are willing to lose, while the take profit is to assist you to book your profit when it has hit your desired level of profit. So with this said, I believe we are good to go to the advanced class. So next week will be the advanced class. So this is all that there is to learn in the basic course according to what I want to teach. So the next video is going to be our advanced course. We're going to start advanced course next week. I would advise that you motivate me also, please, by subscribing to this channel. Subscribe. I'm begging you, subscribe to motivate me to do more videos. Like the videos, and then if you have any question, drop them on the comment section, and then I'll attend to them in other videos. So I want to say subscribe, share this video, click the notification bell so that you will get notified when I upload new videos. With this, I want to say thanks for watching. See you in the next class.